Now let's look at some of the safe havens that investors have had to run to in this week. Of course, the U.S. Treasuries continue to remain a favorite. The 10-year Treasury yields have fallen. We saw it swinging between highs and lows. It fell below the about 2%, and I think it's back up over 2% also. So you see, do you think investors still consider, though the U.S. is still in that debt issue, you think investors are still very confident in Treasuries?
They are still confident in Treasuries. At the end of the day, we need to realize that the U.S. economy is still the surest bet globally. But also we have to come back to the Treasury gold trade. If you see gold recently coming below $1,820 per ounce because of profit taking, and I expect that gold will come further down and shed more gains before it hits a higher support and goes back on technical analysis chart. You have to realize that whenever gold is not favored, investors tend to push their money to U.S. Treasuries. So I think the relation, the fact that Treasuries is moving down between above 2% hunch and below hunch is just an example of the relationship between the gold and Treasury trade.
Okay, I don't know if it's safe to say that right now across the zones, the key economic zones, the U.S. market, the U.S. economy, Asia, and especially Europe, the debt crisis in Europe, do you think the policymakers have been able to contain or deal effectively or tackle well the confidence crisis, let me put it that way, that's still rattling the markets?
They are trying their best. I think markets, because it's a free market, will keep pricing reality. The world is going through a season of tough decisions and major structural adjustments. And in the next 5-7 years, we're going to see a period of stability and growth again. So I think political leaders are having to make tough decisions that most times is not in the in tune with special interest and in tune with electorates. But at the end of the day, it's better for the economy.
Now, okay, we know that the global markets are all intertwined. We have the developed markets and, of course, the emerging economies like Nigeria. Now, coming back home to an economy like Nigeria, we know for like our stock market, for example, 60% of it is in the hands of foreign investors. Do you think that there are lessons that we also can learn? We also have our own issues, especially in our, we still have a banking, I don't use the word crisis anymore because we seem to be moving, we've made a lot of progress away from, the word crisis to, resolving the issue. We're having some EGMs coming up later in the month, and shareholders are expected to approve some of these merger deals for the banks. Now, our own economy as a whole, in terms of fighting inflation, in terms of learning lessons from what the markets, what has happened to other developed nations, how would you see us how do you think we should position ourselves and learn from what the other markets have been through?
Well, I think the Nigerian market needs to be more multilateral. It's very, very sad that foreign investors control 60% of the market, and most of these funds are what I call speculative foreign direct investments, which can be pulled out at any time. If you remember the example of Merrill Lynch, the $5 billion it had in Nigeria, and when it was acquired by Bank of A during the heat of the financial crisis, and then the stock market plummeted because a lot of those funds were put in the capital markets and the all-share index dropped. This is where the Nigerian government comes in, where the Minister of Foreign Affairs needs to advise the President on the local content of Nigerian companies, on restricting
perhaps
ownership.
Maybe more the Minister of the Economy instead of the Minister of Finance.
Yes, the Minister of Finance and the Minister of Foreign Affairs has to advise the President on limiting the flow of capital to such sensitive areas of the economy like finance from foreign markets. Nigerians should own more of these companies so that the flow of capital will be a little bit restricted and tempered. At the end of the day, no matter how good and how prospective the markets are, if there's a crisis abroad and they need their money, they will pull out their funds. So we need to take heed, and we need to learn lessons from this. And one of the lessons is to look more closely at local content and sensitive areas like finance.